Hey guys, Akil here. Welcome back to another weekly video. If you guys are brand new, I'm a Forex trader, a trading coach, and one of the co-founders over at tier1trading.com. In today's video, we're going to talk about a few subjects. One is going to be entry confirmation. Another one is going to be a mistake that many struggling traders are making that, well, unfortunately are causing them to lose a lot of money. Now, I've got a lot of experience in trading. My own trading journey started back in 2007. I started coaching traders in 2012. And between my personal struggles and working with struggling traders on a daily basis, I think I have a pretty good idea of what's holding traders back from success. And in fact, each and every year we put out a poll question asking traders, hey, what is hurting your trading? And the answers come back pretty similarly each and every time. And I'm confident in saying that it falls really between one of two categories. There are issues on the technical side. That's going to be the skill of trading. So anything from reading a price chart to trading strategy. I would even throw, risk management, position sizing under that category as well. And then the other category is going to be trading psychology. So these are the mental errors, the moving stops back, the taking targets early, basically the self-sabotaging type of things. And in today's video, we're going to talk about both of those. We're going to talk about a technical error that traders are making in not waiting for confirmation of a pattern. We're also going to talk about the psychological side of entering trades early and how that can get you into trouble. So should be a pretty enjoyable episode. Should be something that many of you guys could relate to. It might be a little long as well, so make sure you grab that cup of coffee. Make sure you get your notes beforehand. Before we get started, while the disclaimer and all the legal stuff is going past, do me a favor, hit that like button below, and I'll see you guys at the end of the video. Dollar yen's in an interesting position, right? So if we look at our IPDE, if we do our IPDE, identify, predict, decide, execute here on the daily chart for the dollar yen, where would you say we are trading at? Are we trading at anywhere of relevance? You can hear the question in my voice, relevance? And this is a Quan says, doesn't look like it. Raymond says, not in particular, but I cheated, and I know on the 4 hour, we can see structure a little bit better. Richard says, I'm a bit late. I didn't miss much. No, only the secret to success that I can only say once a month. But don't worry, in 30 days, I can repeat it again. And it's not on the recording. I have to delete it because that goes, the whole agreement I made, it has to be once a month, and it can only be a one-time thing. So in 30 days, you can look at it again. Raymond says, nah, I never cheated. That wick on the daily gave clues, right? So in general, right, I would say on a daily chart, at first glance, you don't see any structure. It's like, well, Akil, there's nothing really here. If we want to kind of look at the next relevant level of structure, we'd probably be looking in this area right here as the first level, and in this area as the second level. Would you guys kind of be on the same page with that as far as looking at structure? Those are going to be your two main levels that stand out. However, if you take a quick look at where we're trading at, right, you're going to see this wick down here, right? You're going to see this candle. You're going to see this spike back down here before we rally up. And actually, right at that red price line, you're going to see a wick. And when you go down to the 4 hour, right, this is going to be a level of structure. So it's not one that you see on the daily chart or your higher. This is my higher time frame, so the higher time frame, but it is one that you're going to see on your trading time frame. So when I classify this, right, this for me would be a minor level of structure and not a major level of structure, right? The major level of structures need to be those swing points in the market, kind of like we talked about yesterday, the points where the markets go from either down to up or up to down. This is going to be a minor level of structure because it is going to be a level of structure, but you can kind of see it's in the middle of a swing instead of on the outsides of a swing. So what that means is that because it's a minor level of structure, I'm going to take a more conservative approach, right? So you guys know that my preferred approach, right? My My favorite setup is to identify a level of structure, for us to get a candle that tests that level of structure, for that candle to get rejected, and then to enter with an aggressive higher high, higher close, right? That is my absolute favorite thing to do. That is the best thing that I can do. However, with a minor level of structure, when you can assume, I guess let's ask you guys this question first. When you have a minor level of structure, do you think it offers a better or worse trading opportunity? I hate using those words, but would you project a better, would you take a more aggressive or a more conservative approach? Let's put it that way. I don't like better or worse. I don't know, because it doesn't, I feel like that's an outcome-based statement. Where, it doesn't, what is better and what is worse, right? If we're talking about process over outcome. But I would take a more conservative approach because I don't have as strong as a signal. So when we go down to the 4 hour, that's one of the reasons that instead of looking for a higher high, higher close, and we didn't necessarily get that anyway. We got a nice inside bar here, and then would have been a false break to the outside. I would look for a double bottom, right? And so that's what I'm looking for here on dollar yen, is a double bottom. You can see we don't technically have one right now. And why is that? And this was also something that we covered in yesterday's Q&A, which was very important. I think Mia asked this question. Why don't we technically have one? Yep, the candle has not closed, right? And this is a small detail, but a very important one. Because in the past, I may have had a trader friend that looked like me and sounded like me that may have done this before, where they would be so excited about a trading opportunity. And imagine this, right? So imagine I'm Akil, right? I am Akil, I guess, but I am Akil probably like 13 years ago. And I'm a newer trader. I'm anxious. I've quit my jobs. I've got nothing better to do than to watch the markets all day because I had this false dream that it was going to be very, very simple to become a consistently profitable trader and make millions in the market, right? So I put myself in a position where I kind of threw everything into trading, which was not smart, but it worked out. So, I always feel hypocritical when I talk about that. It wasn't smart, but it worked out, I guess. But I got nothing better to do all day than stare at charts. So I'm looking at this. I do my pre-market at 6 o'clock, right? So I do my pre-market at 6 o'clock. I'm looking at this at 6 o'clock. It's essentially in the same position it is right now. And I'm saying, man, this is going to be the cheapest possible buy I can get, right? Because this double bottom, is currently, if I were to enter now, it's currently at the bottom of the range, right? This would be a cheaper entry. Versus if, I'm trying to shift this thing real quick. Come on. Versus if, right, if I'm entering right here and stops are going right there, just do some loose stops real quick, right? This is going to be a cheaper entry than if the bar closes up here. Would you guys agree? What's better, entering here or entering down here? Here, 1 or 2? 1 or 2? Seriously, type it in. 1 or 2? 1, 2. 1, 2, right? So I'm looking at this and I'm like, man, this is a cheap entry. I can buy it right now. And then as this thing starts spiking back up, the fear, right? I got to wait 2.5, 3 hours for this to complete, right? The fear starts creeping in where it's like, man, this thing is moving up. And all I'm seeing is, right, I'm seeing 3 things. I'm seeing my risk increase. Oh, got to risk more, got to risk more, got to risk more. I'm seeing my profits dry up. Ooh, I'm going to make less. Ooh, I'm going to make less. Ooh, I'm going to make less. Ooh, I'm going to make less, right? And I see the opportunity getting away. This is a good trade. Good trades don't last. Good trades don't last. Just like real estate, right? Good deals don't last. Good trades don't last. And I'm staring in front of my chart for 3 hours, basically just torturing myself with these thoughts. And if we know anything about torture, maybe you don't know anything about torture. I don't know how many of you guys have been tortured before, but if you've ever seen a movie or if you've ever read anything about torture, you eventually give in, right? You don't survive torture. You just buy time until you eventually give in, right? So when you look at this chart and you're doing that to yourself and you eventually give in, what do? You take the trade, right? You're like, boom. Especially you look to the left, no one's there. Look to the right, no one's there, because the pro and the con of trading is that we're our own boss, which is great. because we can do whatever we want. Someone asked me that question this morning. What is the most delightful thing about your career? And I said, and I say this in the most humblest way possible, I can do whatever I want whenever I want. That is the beauty of freedom of time. Now, not to get too much off on a rant, but here's what a real entrepreneur knows, and many of you guys know this too, right? Just because you can do anything you want whenever you want, does that mean that you're actually able to do whatever you want whenever you want? You should do whatever you want whenever you want? Just from a business standpoint, kind of backing up from trading for a little bit. Because that's a very important lesson. I see a lot of younger people chase that dream, and then they find success. And this is the sad part. They find success and like, man, I can do whatever I want whenever I want. And then guess what happens to that success? They start going the opposite direction because now they've stopped doing the habits that got them successful in the first place. The truth is, right, I do have complete control over my time. I can choose when to do this and when to do that, and if I want to do this and if I want to do that, or if I want to pay someone to do that, or if I want to do it myself, right? I have control over all of that. But we know that in life, in trading and in life, everything's a give and a take. If I choose, right, so here's a dilemma I had yesterday, right? So my kid had this soccer camp, right? Soccer camp. He scored a goal yesterday. It was awesome. He scored a goal. He got all happy, did like a fist pump. Some other kid cried because he was mad. I was loving it. I was like, yeah, right? I was so excited. We haven't done organized sports in like, this was supposed to be his summer. He's 5, so, but everything got canceled because of the COVID, right? But he had a soccer camp from 3 to 4, right? I thought it was starting on Tuesday. I thought it was Tuesday through Thursday, and it was actually Monday through Thursday, right? So I had scheduled a big block of back testing. And I had to make a choice. Do I invest this hour and a half, 2 hours in back testing, working on my future? Or do I invest it with my kid? So there's a give and a take to everything, right? Obviously, I chose my kid, and that's the freedom of time. I have the freedom to make that choice. But something was sacrificed, right? Something was sacrificed. I'm behind 1.5 pairs in back testing now. So it's a give and a take. But the point with no boss, right? There's no one to tell you, hey, Richard, you can't do this. So eventually, like any type of torture, you give in. And then, right, it may not happen this time, but price can come back down. It could actually fill you at a cheaper spot. And now you've entered too early in a much costlier position. Or, right, this thing may break through, right? This thing may break through, it may break and close below, and all of a sudden you're stopped out. And in hindsight, you look back, and should you have ever been in the trade in the first place? Nope. Because was this ever a double bottom if this current candle closes below? Nope. So with stuff like this, I don't want to say you hate to say it, you just get away from your computer until about 8:55, right? 5 minutes before the hour, right? That gives you enough time. You can come back, you can reevaluate your stops and targets, right? And then, but just don't look at it. It's going to drive you crazy. So I'm waiting on this. 9 o'clock is the closing candle on the 4 hour. I've got about an hour and 10 minutes. So I'm going to wait to see. If we close, we should be good. Or if we hold, we should be good. If we close below, then I don't take it. In the meantime, we know there's 3 parts of a trade, right? What are our 3 parts of a trade? I gave you 1. Entries, what are the other 2? Entries, stops, and targets, right? EST. EST. The 3 things you know to establish a trade. That was cute. So we can start working on stops and targets. Now, first, we talked about, kind of glossed over this. We talked about that little wick on the 4 hour. If we zoom back a little bit, just so you guys believe me, right? You see that wick here? So this is that minor level of structure. Right there. So that's the level that we're holding, this blue line. So we're not in the middle of no man's land like it may seem on the daily, but we do have a minor level of structure which is being held. So we could look at this. What's one way we can use to do our stop loss, guys? It's repetitive and boring, but it gets the job done. We can use an ATR, right? So right now the ATR is 30. Right now this is our low. This could change. So that's why I say you got to come back 5 minutes before and potentially adjust, right? So we're looking at, should be 104.77s. So let's just pretend we enter right here maybe. 77s is going to be up here. That's typically the easy part. Targets. Any ideas for targets, guys? If I stay kind of a hover right here. Darren says the June low or the wick. So let's drag this up a little bit to this low right here. Right, we'll drag, I'll put another one on for you right at the wick. These two levels of structure are previous structure lows that were broken. Drew also says, Raymond says 106.07s, right? So that wick right there. Now again, Raymond, you know this, if you're gonna be at 106.07, you might as well be at what? You might as well be at what? Yep, you might as well be at 106 even or 105 99s, right? For you guys that are new, that's important, right? These psychological numbers that end at 0050, those are going to act very similar to support and resistance levels, right? There are people out there on the internet that tell you they don't matter. I think they do. I mean, I've made the mistakes of placing stop or targets and stuff right above those levels, and I've seen that it's safer to get to avoid them. So in a situation, if you're able to keep the risk good, or the risk reward profile good, and it may be worth sacrificing 8 pips to put yourself in a little safer position. So we have those two levels of structure right there. We can add some Fibonacci's. I think Drew said Fibonacci. So let's take a fib retracement from our swing high right here to our swing low. You can see we're going to have a 382 Fibonacci retracement right at this level, 105.92, so right below that little wick. If you want to take a larger one, you're not going to get much that lines up, but you can, and you're going to see a 382 a little bit higher at this wick right here, again above that 106 level. So you got some confluence. You have that lower level of inside structure. You've got that Fibonacci retracement. This is where I'm looking for 105.90s. For initial targets, I have a good 1-to-1, or a good risk reward, excuse me. It's more than 1-to-1. It's 1.29 to 1 as is. I know that this is the cool thing where I wish Ninja had this, right? I can actually adjust this. I know that once I get to here, it puts me in a negative risk reward, so I wouldn't be able to take the trade, right? So I kind of know exactly where price has to complete at for me to take the trade. That's why I say always come back like 5 minutes before, just to make those last minute adjustments, right? So that's a good first target position. If you're looking for secondary targets, Raymond just typed in, maybe you're more aggressive and you could shoot for 106.65s, and that's going to be this level up here, right? We can all tell why Raymond is interested in this level, right? Can you guys tell? Can you see it? You get a little 50% right underneath there too. Look at that. 50% bigger fib, yeah. Now, I would say this, and again, keep in mind, if you're new, you always got to remember Akil's profile. I'm a conservative trader. And I got a tweet this morning. Actually, I randomly shared this. Every once in a while, I share like a trading idea on the internet. I was thinking about the other day where it's like, I see all these other coaches and stuff. They're always sharing their trades and stuff like that. And it's like, I always tell myself like, man, I should do more of that. I wonder if people actually think I'm a trader. And then I just don't do it because I don't care. That's the power of having kind of a cool platform at Tier 1, that there's any desire I have to talk trading is with you guys inside the platform. And I don't have that desire to do it on the outside, which saves me time from feeling like I need to post trading ideas on the outside. And in all honesty, it saves me a lot of headaches, right? Because typically traders are lonely. You guys know this. Traders are lonely. And one of the reasons they share ideas is because they want to share. Like, trading is cool. They're passionate about it. I like talking sports, right? I want to talk sports with people. I want to talk trading with people. So when they have no one else to share it to, boom, social media. Unfortunately, when you do that, you get the crazies, right? You get the crazies. You get the good, but you get mostly the bad on social media. And then it turns into arguments because people are just like, oh, well, your trading style doesn't work and blah, 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 right? So one of the cool things about having our platform here is I can actually speak trading with an intelligent group of traders, right? I can speak trading with a more intelligent group of traders who, not necessarily, you don't have to agree with my ideas, but you can understand the principles. We can have intelligent conversations instead of getting tempted into those troll battles, which we often get sucked into. But I did share this, and I got an interesting comment, not a trolling comment or anything, but it was a guy that said, hey, I'm going to wait until, we're still in a bearish trend here on dollar yen. I'm going to wait until we're more bullish, until we see some type of bullish sign before getting long. And that brings up the point that, what type of trade is this, guys? Is this a trend continuation or a counter trend trade? Right? This is a counter trend trade. So if we're going against the grain, if we're swimming against I forgot the name. What's it called? The flow of the water, not the tide. What's it called? Come on, give me something. Give me a word here. What's it called? The water. It flows. It goes. Current. There we go. We're swimming against the current. Got it before you typed it in, Ed. Do we want to be more aggressive or more conservative? At least this is my philosophy, right? I want to be more conservative, right? Because I'm only looking for a little bit of relief before the market continues going on its way. So for me, I always want to look for the first sign of danger, kind of like what Andrew was looking at in yesterday's Q&A with the daily chore. I want to look for the first sign of danger, the first sign where it's like, hey, if I were a counter trend trader, because I am, or if I was a trader looking to get involved in the opposite direction, where would I first be involved in the market? And that's when I want to have a little bit of my position off, if not all of it. Then if I want to be more aggressive, right, this would be a secondary level up here that we can be more aggressive for. But that would come after, for me, I put some money in my pocket, I move stops to break even, and there's no risk left. Now, again, that's me. If you're a more aggressive trader and you want to shoot for that higher level, nothing wrong with that as well. And you can still kind of protect yourself on the back end too by saying, hey, I'm going to, be very on top of things when it comes to risk management, where if we get a higher high, higher close above this double top V point, then I'm going to roll stops to break even or something like that. So there's still ways to go about it. You just have to kind of find your style within your philosophy of trading. So cool opportunity here. I'm going to stop looking at it because now it's spiking up and it's making me angry and scared that I may not have an opportunity to get involved. But any questions on dollar yen so far? I know there were a few questions that came in the chat. Let me get back and look at them real quick. Maybe you're more aggressive, you said. All right. So, unfortunately, it is 9 o'clock. I've waited 3 hours since doing this analysis for a buying opportunity. And what did we get here? A lower low, lower close. What does a lower low, lower close do for us? It invalidates the pattern, which means no trade kaput. So, spoke about this earlier. This is the reality of trading. But two valuable lessons here. One, if you guys are new to trading, this is what trading is typically going to look like, right? You're going to have an idea. You're going to make a prediction. You're going to put it on your radar. You're going to wait for your confirmation, your entry reason. You're going to wait, you're going to wait, you're going to wait, you're going to wait, and you're never going to get it. And then you just start over, right? Now, what's funny is the internet people don't know that. So I told you I posted this to the internet earlier, right? If this thing keeps going lower, I guarantee I'm going to get some responses. Hey, Keel, how does it feel to be wrong and lose money on dollar yen? Little do they know, it was never an executed trade. But again, they don't know that because people people think that because you make a prediction, it's a trade. More importantly, what I hope sticks with you guys more is the lesson that we talked about earlier, where it's like, hey, if you would have rushed into this trading opportunity earlier because you were impatient, because you were anxious, or whatever it would be, you would now be involved in a buying position in a trade that never gave you a valid setup. Now, once you're in that position, you have two options, right? You can take the professional option. What would be the professional option? Aside from never taking it in the first place, but we all make mistakes. It happens, right? We've all been in bad trades, right? Get out. Rule of thumb, if you're ever in a bad trade, you get out right away. I don't care if it's in profit. I don't care if it's in loss. You just exit it right away. The second option, and the more realistic option for most newer or struggling traders, is what? What do you think? Do you exit right away, or do you kind of, wait and see how it plays out? Yeah, you're like, okay, it's invalid, but could be a false breakout. We're just doing a little stop hunting down there, right? A little stop hunting down at that level. Once we hunt those stops, it's going to reverse in our direction, right? And then what happens is it gets a little bit lower. It starts pushing down. You're like, okay, and it's going to reverse any minute, right? It'll be like that story I told you about, the guy that was selling pound yen. He's like, it can't go down forever, or buying pound yen. It can't go down forever, Akil. And I'm like, yeah, I guess it can't, but you can go broke before it reverses. And then he actually won, but he took like 5 pips and lost more on commissions and spreads and rollover costs than what he actually gained from the trade. But he was all excited, and you let him have it because, you got to give people wins sometimes. But yeah, you hold and hope, Ed says. You hold and hope. And then as you're holding and hoping, you're just losing more and more money. You're losing more and more money until eventually it hits your pain threshold. Once it hits your pain threshold, then you exit, and you ended up losing a lot more than what you would have lost if you wouldn't have entered in the first place, or if you would have acknowledged your mistake and exited right away. And then for some of you, it make it even worse, where you lost money, then all of a sudden what happens after you lose money? You want to what? What happens after you want to lose money? What are you looking for? Drake said it best. Looking for revenge, right? You're looking for revenge, right? And all of a sudden you get short. And you justify it because, well, it's invalid double bottom. It's a lower, low, lower close. IPDE, Akil says lower, low, lower close. Predict a continuation lower. So now I'm going to get short, right? And of course, you've gotten short with no entry reason or anything like that, or no analysis, just because you lost some money and now you want to make money back. And that's when the market goes long and you get whipsawed to death, right? You're a ping pong ball that's getting slapped back and forth across the screen until you eventually bleed out and go broke. And then you guys are all nodding your head because I think at some point we've all kind of been there. Most of us have been there before, unfortunately. So that's why rules rule. Stick to your rules. It does suck sometimes to be a trader. But in my opinion, trading is more about, it's in my experience, what I've learned is that I think it's less about finding good opportunities and more about avoiding bad opportunities. It's success in trading. It's much more about not doing dumb stuff than actually doing things that are good. If you can, you guys know my personal story, right? I became successful by eliminating my mistakes. It wasn't any changes at the time I made to my trading strategy or entries or anything like that. I just stopped doing the stuff that was recklessly losing me money, and all of a sudden I started making money. So if we can just eliminate this stuff, you give yourself a much better fighting chance to be successful. So not a trade, but a good lesson, hopefully, and we can revisit that, do some more analysis on it. Let's go to Pound Aussie. Let me just type in. So I hope you guys enjoyed that conversation from the live room. If you're interested in popping in the live room, we have both a London and a New York session. It comes as part of your trial membership, so check it out. You also get 18 plus hours of training videos. So definitely worth your 14 days if you ask me. However, if you're not into that, I also have a lot of free videos on YouTube. You can see a few of them to the right. Check them out. And until next time, plan your trade, trade your plan. Take care.